Hey traders, this is Ron Haight. Hope you guys are having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here doing something different. We'll start with the Russell 2000, the IWM, which is the small caps, tacked on 1.53% today. So if we look at the September high, which is over here, we can see it's been coming down, right? And now we're getting a really nice move. And in fact, if you look at the volume bars, the black are up days, the red are down days, making some nice progress. Now, the lows from October, November, they sort of coincide with the 50-day. As of right now, it's about, $3 or 20 some cents away. The 50-day is going to just keep coming down ever so slightly here. So another little more than a day like today, maybe something 2.5% range, and we'll be in there. But right now, short term, this is bullish. And if you notice, the blue line is the 5-day EMA. The red is the 20-day EMA. We're getting a little cross there. That is a technical short-term buy signal. However, we also had that over here, and we had it over here and didn't go anywhere. That's why closing above the 50-day here is a big deal, because you have a little buy signal, get above the 50-day, that's an institutional moving average in orange, then you're also going to be closing above these lows. That would be a sign that, whoa, maybe we do have a bottom now. And the target would then be at the previous highs, which frankly is going to be right near the 200-day. So the IWM here from a technical and visual perspective is pretty easy to see right now. Let's do MDY. That was the IWM. MDY. Nice big volume bars here, pushing up. Today we closed up. It was the strongest of all the majors, up 1.68%. Almost identical. Target the previous lows. Well, that's right where the 50-day is. That's around 323, so about $9 higher, little maybe close to like 3% higher. Then the target becomes the 50-day. All the commentary for the IWM applies to the MDY. If we go to the Qs 2 days now back above the old support zone. Target 50-day, target 200-day, and then back up to the highs. I mean, we don't want to get ahead of ourselves. I'm not saying we're going to get back to the highs instantly, but we are making progress. From somewhat of a concern yet is I could do something like this. I know I'm not catching the absolute highs here, but just visually, we still have lower highs. And if I do something like this, you can see we still have lower lows. That has not been broken. So for lower highs to be broken, man, we got to get back up to December 1st. The first trading day, which is December 3rd, we had to get back up to 172.50. That's like 12 points, 13 points higher yet. It's a long ways off. But even though we're getting this rally, we're still in this wavy, downtrend, lower highs, lower lows. I think IWM and MDY look better than the Qs right now. If we move on to the spiders, the S&P 500, almost getting like a V-like type bottom here. We do not have a 5 and a 20-day crossover yet. If I zoom back out, you'll see we're back into this old support area. The 50 days coming in right where the previous lows are. So target right now, ballpark, 262-ish, I'd say 262-ish. Another 6 points, 2.5%, 3% maybe right now. And here are the diamonds. Little 1% move today, same thing, target 50. Now, on the diamonds, the 50 and the 200 are pretty close. Get above the 50, the 200 is right there, and then back up to 260. At this stage, if we use the diamonds as the example, the fact that this was support and then it led to falling off a cliff, which is what I highlighted. You test, you test, you test, you break, it leads to another waterfall potential decline. This happened. So if you get back up there and we get rejected, we can come right back down in a heartbeat just as fast as this happened, where it's a matter of a week, week and a half, and boom, you just lost 2,000 Dow points or something like that. This is still a weak bounce, or I should say it's still a bounce. It has not gotten back at least into this trading range yet. Overall, short-term bullish because we're above the 5 and the 20, but still caution. There was a question on SQ, which is Square, and not specifically on Square, but what constitutes a trend change. And I want to use Square as that example. I get this question a ton. Zoom out. So from May, the orange line is the 50-day SMA, institutional moving average. We basically stay above it. And once we get below it, we stay below it. So now if I zoom in on Square, what needs to happen before Square, as an example, would be deemed technically bullish, or the short-term downtrend from October till now is over? We need to get above the 50. And just because the 200-day is just a buck above it, let's get both. Two birds with one stone. We close above both of these, the downtrend will be considered over at this stage, and then the upside target. This is like an island reversal, just a gap up and then a gap down, or a candlestick reversal pattern. You know, you could say there, I don't think that's going to provide much resistance at all. I'd probably say something close to 80 to 82 and then back up here. Now, normally you also like to see it close above a previous swing high, which is December 3rd and November 7th, to break the lower highs, lower lows. But given these two institutional moving averages are so close together, breaking both of those, that's a big deal. Let's take a look at Apple. Did get a question on Apple, you know, does it look like it might be bottoming? The answer is no. We were up a little bit today, almost 2%. We're barely above the 5-day. Volume is not impressive at all on up days. This thing still looks very, very weak. And if the market rolls over here, it's going to be ugly. The target is still 140. We did get close enough to that a week ago, but it still is 140 on the weekly basis. And then it's all the way down to 110 at that point. So no, unfortunately, if you're looking to be bullish on Apple, you know, there is an earnings report coming up at the end of the month, but this thing is still not doing well. How about Helen of Troy? Something we don't talk about very much. 5-year daily chart. I zoom in here. Big loss today. It was one of the biggest losers in the market, 12.83%, $17. Target 200-day, well, we're pretty much there. It sort of ties in with this low, depending how you want to look at it. But if we break 110, gap fill down towards 100, another 10% drop maybe on Helen of Troy. Just shows you the value of protected puts for earnings, right? But that thing's definitely bearish. Here are some other stocks. There's a threefer. This is Westlake Chemical. This stock moves around quite a bit throughout the year. And ever since we broke the 200-day in purple, it's just been pretty much straight down. There's been weak attempts at bounces, but if I zoom in closer, you'll see the 50-day in orange just keeps rejecting it, right? Well, look what happened today. Gapped up, closed at the highs of the day. The black volume bars are the up days. That's coming in. You're already testing this high. The next major resistance point, you might as well call it the 200-day. That's low 90s. We're in the mid 70s. $17, $18 potentially higher. There is an earnings report coming up, but that's a month away. So if I want to be bullish on Westlake, I could consider, of course, stock. That's a possibility, always in a paper trading account. I could consider options potentially. I don't know what their options are, but potentially a bull put. And I just did quickly check the options for you. There is no credit availability, good credit available on bull puts, and there's nobody trading the options. The open interest is crazy low. On the call side, though, the calls are interesting going out at least a couple months. There is some open interest, but there's not a lot of people trading these things, so maybe stock might look even better. But the point is, that's a massive upside target. In this case, the 20-day EMA is now pointing up, something it also really hasn't done since, gosh, May and June. So that's a good sign. We also have the 5 and 20-day crossover. A 20-day EMA here would be my trailing stop. I'd consider that one. Here is SGEN, which is Seattle Genetics. If I zoom in here, earnings is coming up February 4th. The last couple days, we're seeing a little bit of a spike in volume, but we're closing at the highs of the day, highs of the day, highs of the day. Stock's up 20% essentially in 3 days. It took out the gap. It took out the previous swing high. I mean, just look at this from a technical perspective. Stock gaps down, comes pretty close to support, right? Comes back up. It's the 20-day, gets rejected, almost fills the gap, comes down. This time it comes up and hits the 200-day, fills the gap, stopped cold. Gap, 200-day, 50-day. That was just not a good place. If the stock could have gotten through there, that would have been super powerful. It didn't. Right back down. Test the lows. Next time, it doesn't even stop. It just goes pop, pop, pop. That's what tells me that the next technical target, somewhere up in here, low 80s. Again, another potential huge move. I would also consider a 20-day EMA as an end-of-day trailing stop. Again, great to practice on paper. Here is Nectar. This stock was at 25, then it was at 110, then it's at 45, then it's at 65, and back down to 30. Well, look what happened today. There's a little bit of a pop, but the volume, pop in the stock price, but the volume popped too. If I zoom in even closer, it pretty much closed on or above these highs. The next target, I mean, this wasn't much for consolidation up near 50. It's really the 200 day. So those are three stocks, Westlake, SGEN, and NKTR, three that have incredible upside potential only for technical analysis. I've done no fundamental analysis at all, and you can use those 20-day EMAs as a potential trailing stop in a paper trading portfolio. Again, not advice to buy or sell. Two other things. One, I got a question on Elliott Wave. I'm not a big fan of that. I don't like how all the relabeling is always done. It doesn't mean it's a terrible thing. There's lots of stuff out there. Always, find something you enjoy following. But for me, I don't like it whatsoever, and I don't use it at all. It's just way too much relabeling when something doesn't work. It's like playing Monday morning quarterback all the time. Now, one last thing. If you have not registered for this event, please do so. As of this point, we're probably down to like 30, 40 seats left. You're going to want to log in early. Once you get the confirmation that you were able to register, keep that link. Get in about a half an hour early, I think, if you can. Normally, 15 minutes is good. You might want to come in a half an hour early. So get there 11:30 a.m. Eastern tomorrow. I'll show you the top 10 proven bullish and bearish stocks to kick off this year with a bang. We've talked about GLD, which I have a bullish call position in. We talked about Netflix. There's others. You got to be aware of this. If you were not prepared for GLD and Netflix to start ripping, that is my point. I will show you this free. Give me 5 minutes of your time. In the first 5 minutes, I'll unveil it. I'll show you the stocks, and then I'll tell you why these patterns keep playing out. It's super simple. You're going to love it. The folks that do come, you guys write me the emails. I get the testimonials. You guys tell me how much you love it. I did it in December. We hit max capacity a bunch of times. I went on vacation. I'm back. So tomorrow, noon Eastern, 9 a.m. Pacific, the link's at the bottom of the YouTube video. If you got this via email, there'll be a link in your email. Be sure to register and grab your spot ASAP. I promise you won't regret it. It's going to be a ton of great information. And the best part, it's free. So wish you and your families, again, Happy New Year. I'll see you tomorrow. Take good care.